Every day, billions of dollars are traded in financial markets. But here's the question. How do institutions decide what is actually worth? They don't guess. They use math. And that's where quantitative finance comes in. Welcome to the Money Loop, where we break down finance, investing, and the systems behind money. In this video, we're starting with the foundation of what quantitative finance actually is. Quantitative finance, or quant finance, is the use of mathematics, statistics, and programming to analyze financial markets and make better decisions. Instead of relying purely on intuition or experience, quant finance uses data and models to understand how markets behave. Financial markets are complex and constantly changing. Prices move because of news, economic data, investor psychology, and global events, all at the same time. Because of this, it's almost impossible to make consistently good decisions just by guessing. Quantitative finance helps by turning uncertainty into something we can model, measure, and analyze. So, what do people in quant finance actually do? Well, there are three main things. First one is pricing. Quants build models that calculate the fair value of financial assets, especially complex ones like options. Second one is risk management. They measure how much risk is in a portfolio and estimate how bad the losses could get under different scenarios. The third one is trading strategies. Some quants design algorithms that automatically buy and sell assets based on patterns in data. Let's look at a simple example. Imagine you have the option to buy a stock at $100 in the future. What is that option worth today? Well, this depends on several things. One is how volatile the stock is. The second one may be how much time is left or where the current price is. Instead of guessing, quant finance uses mathematical models to estimate a fair price based on these factors. To do all of that, quants rely on three main tools: mathematics, especially probability, statistics to analyze data, and programming to actually build and run models. In simple terms, quantitative finance is the use of math and data to make better financial decisions. It's a core part of modern finance used by banks, hedge funds, and trading firms around the world. And in the next video, we'll start breaking down the key concepts behind it, step by step.